estate loans and other financial opportunities mentioned on the show are offered by various companies, entities, and organizations.
Actually, they've been very nice. I told the guy because they came in on the show.
The information provided on this show is merely to allow the listener the ability to become more familiar with such potential opportunities and to obtain more detailed information on the suitability of such opportunities to the listener's personal and financial situation from the companies, entities, and/or organizations involved.
A new home you've dreamt about for years, and there's only one thing standing in your way: getting a loan. Rest assured, United Mortgage Corporation of America is here to help make your dream a reality. Get answers, get results, get the service you deserve. What kind of loan do you have? Call now at 888-LIFE-980. That's 888-5433-980. Or go to the web at yourrealestatelife.com and take action today.
Good morning, Southern California. Welcome to Your Real Estate Life. It's your day in real estate radio. We are navigating rates, refinances, and opportunities this fall. I'm Michael Harris, President and CEO of United Mortgage Corporation of America, MLO 233410. United Mortgage Corporation of America, 3189 NMLS. You know, we got mortgage strategies right now for a changing market. We're looking at what's going on. I mean, this weekend, we'll walk through the numbers that matter most when it comes to a mortgage and where rates are standing and how the Fed's thinking affects mortgage pricing. Do we lock? Do we float? What are the practical strategies to reduce the total cost of borrowing? We'll also talk about life settlements in our third segment of the program. We have Alex Sirotkin. He'll be talking about a financial tool that allows you perhaps to sell and do that, but doing it from the right perspective. We'll let him go over that. That's not my expertise. I don't pretend to know everything when it comes to finances, and I actually bow to those experts who do. And we'll have him join us in the third segment. But we'll also talk about a financial GPS as we do on the program. We'll talk about the Money Max program and how it helps you to accelerate your payoff of all your debts without refinancing. Yes, even a lender saying without refinancing. Now, refinancing can help in certain circumstances by freeing up discretionary to allow you to retire debt sooner. But is it a guessing game? How much? How much? How little? What do you do? Do I put an extra penny, an extra dollar? What do I do? Round up? Perfect information. Eliminating your interest footprint. But right now, the mortgage markets have been moving around a little bit. We have Freddie Mac this week showed on the 30-year fixed rate about the mid to lower sixes on the interest rate on a 30-year fixed. Now, we've been seeing some small moves, ups and downs and arounds, and it really does make a difference when you're closing on a purchase or refinance. These swings are driven by the bond market and flows and expectations of the Fed future and their future policy. So the mortgage market prices it in prior to the Fed moving. So it's not the Fed move, it's what's going on prior and the economic news that comes out as a result. And we're seeing the Fed move coming. On the 29th of this month, we will be getting 0.25%. Yes, we are. We're going to get 0.25%. Now, some say, well, could we get a half? We don't want the half because then it looks like the economy is even worse than it is. And then we got bigger problems and then more stuff's going to happen as a result. Slow and steady, we need to move. It's a big ship. So we need to move the quarter on the 29th. We then need to do the quarter on December 10th. Yeah, we need two moves still this year. So we're going to be looking at that. Right now, interest rates are hovering near the best levels that we've seen in the last 12 months. We had a delay here on the labor report. We've had some labor information. The ADP came out. We're looking at some of that. That's great. You know, that was on Wednesday. And we saw that kind of come out in hiring in September and a kind of a peak at that. And the response we saw was, we do not seek or welcome further cooling in the labor market conditions. That was from Fed Chair Jerome Powell, but that was back in August of 2024. So that's how they're thinking. Now, how did it look? The private sector employment declined 32,000 jobs in September, marking a rare contraction to the ADP report. Alongside with weaker job growth, pay gains remain nearly unchanged at 4.5% year over year. Adding to the softness, August ADP payroll figures were revised lower, reinforcing the trend that hiring momentum is easing more than initially thought amidst uncertain backdrop. Now, Chief Economist Dr. Neela Richardson from ADP, despite the strong economic growth we saw in the second quarter, this month's release further validates that we've been seeing in the labor market. The U.S. employers have been cautious with hiring. The takeaway, a weaker labor market can lead to higher unemployment and less consumer spending to support hiring to prevent a deeper slowdown. The Fed will need to lower rates to make borrowing cheaper to encourage investment. The data point to the labor market has lost some momentum. The Fed, October 29th, the 0.25% is coming. The idea now is we're almost for sure, the next one, December 10th. Now we have housing prices. They're also cooling. Case-Shiller Home Price Index, U.S. home price took a small step down in July, the fifth month in a row. It's not a crash, but the prices are still up from last year, but growing in a kind of slowing way down. It's kind of a car easing off the gas, so to speak. The national index, the prices dropped 0.1% from June to July after adjusting to a normal seasonal ups and downs like sales in summer. Compared to July 24, they're up 1.7%, the tiniest in yearly gain since July of 2023. The sixth straight month of weaker growth. When you factor in inflation, rising costs, eroding buying power, it's down 0.3% monthly and 2.3% yearly. In other words, homes feel cheaper in real terms. Now, 20 city index, same story, 0.1% month over month, 1.8% year over year, slowest in 2 years. Inflation adjusted, negative 0.3 monthly, 2.2 yearly. This covers hotspots like Denver, Miami, Seattle. I mean, these areas are covered in that. On the 10 city report, it's kind of holding steady. It's down 0.1 monthly, but holding a bit stronger at 2.3 yearly up. Now inflation, negative 4 monthly, negative 1.7 yearly. Think coastal powerhouses like New York City, San Francisco. So we're looking at these statistics, but mind you, we're not falling off a cliff. We're just not rising as fast. The yeast is not working. Before, it was just going and going and going. It's like that, think about that, the I Love Lucy episode where she's baking the bread and the bread just comes right out of the oven and traps her. And boy, oh boy, that's not what's going on right now, but we're not yet popping. And I don't see that really happening. The Fed's got some moves ahead. I think 4 more initially. I think of a quarter each. So we're looking at the slower home price growth, strong signal, economic cooling, giving the Fed another reason to cut rates to stimulate demand and keep the housing market from stalling. This cooling trend signals price normalization after housing boom with years of skyrocket price appreciation. So we're watching that Fed. We're going to watch that quarter point, but that doesn't mean the day they do it, oh my God, mortgage rates went down. No, they were lowest right before they did that. That's why you call us right now at 888-543-3980 to get your seat at the table. Understand what it is you can do to save money, free up interest volume, pay down debt, create wealth. All goes together, but it starts with you. How much are you spending and paying on your current monthly obligations? What is your mortgage doing for you? We had an individual who was trying to protect her 4.125% mortgage rate, but she was going after larger money for other items and she wanted a second mortgage. If we look at the consolidated or looked at the blended number, it was higher than what interest rates are today. I want to show you the best way to do this, and that involves you. 888-543-3980. I'm Mike Harris. More after the break.
your equity position has started to improve? Call about the removal of your private mortgage insurance or mortgage insurance premium and save money today. Call 888-5433-980.
What if I told you everything you understood to be true about money is not? If there was a program to eliminate most of your interest in your life and pay off all your debts, personal or business, even mortgages, in as little as 1/3 to 1/2 the normal time without refinancing and without changing your lifestyle, would you want to learn more? Call 888-543-3980 and request your information today, or email at interest@aheadformoney.com. That's interest@aheadformoney.com.
Welcome back to Your Real Estate Life. It's Your Day in Real Estate Radio. I'm Michael Harris, President and CEO of United Mortgage Corporation of America, mortgage loan originator 233-410, NMLS 3189. Call us right now at 888-543-3980. That's 888-543-3980. You can catch our programs and get started at unitedforloans.com. That's unitedforloans.com. We are for loans. We're just not for the interest that you're paying. You can watch us on YouTube at Your Real Estate Life. That's new that we're doing. So not only the face for radio, you can actually watch me there on camera as well. But we're going to be talking right now a little bit about the economic calendar. Yes, we have the shutdown. Yes, we have delays on our jobs number. Yes, we're waiting for that U.S. employment report. And why does it matter? Exactly what I just said in the last segment. We're watching what's going on the employer side, the hiring side, where the claims are. All those things matter because right now the Fed has a dual mandate. It really does. It's looking at inflation, it's looking at employment, but we're missing a lot of the employment information to actually validate. Now, whether we get that probably before the Fed move or potential day of the move on October 29th, probably. But when is it coming in? And then is it stale information with perhaps the first week in November getting another set of information at that point? And that's really what would matter. So the timing of this really matters as well. So we're keeping an eye on that. But on Tuesday, we have the trade balance for August and why it matters. We're looking at wider trade deficit can put pressure on the dollar and influence international flows into U.S. bonds. In turn, affects the yield. For most homeowners, it's an upstream factor notable when global risk and sentiment is fragile. So as money comes into bonds and changes that yield, we have buyers of that bond, which means it drives the bond yield lower. With absence of buyers, it goes the other way, and we can see higher mortgage rates. So when we have these treasury auctions and we don't have a big demand or not a lot of foreign buyers of the bonds, then all of a sudden it didn't go well and the mortgage market responds and we don't get better. We stay stagnant, or perhaps we lose a little with a midday price move based upon that activity. So we watch these things very carefully. Also on Tuesday, we have the ISM non-manufacturing services PMI for September. So we're watching that very carefully as we go through our numbers and figures. So we're watching that also. So, there's so many things that we watch and do as we look at the marketplace. And as we do this, it's very, very important that we keep an eye on these things because the calendar really does make sense. We look at the consumer credit, we look at the U.S. economy, the ISM services. I mean, it shows the demand of what happens going on in the services area. And it's complicated, but all of these things matter. All these things work together for you and your total outcome. You don't see it, but it's all part of what makes up that difference. I mean, we have the consumer credit, indicates household and borrowing and understanding how much debt. We got a lot of debt, and that's why I work in the debt space, helping you lower your interest footprint. On Wednesday, we have our FOMC meeting minutes coming out on the 8th. We have wholesale inventories coming out on Thursday. University of Michigan consumer sentiment. All these things matter. All these things matter. We saw the 10-year Treasury get a little bit better this week from where it was a week ago. We saw the 2-year note a little bit better. We saw the Fannie Mae 30-year coupon up 19 basis points, which means like an eighth better in fee from last week, which isn't bad. The Dow was up 511, NASDAQ up 297. We saw gold increase by 115, so that was going up. Crude oil down 560. So we're kind of meandering, but we're kind of setting up for that Fed move as we're getting that on the 29th. So that's going to be very, very large. But again, that shutdown just created a little bit of hiccup in my marketplace. Those of you who are doing various items requiring flood insurance, that's problematic. So we're seeing that not happening. So National Flood Insurance Program, we're finding that is closed and the major roadblock getting things closed, whether it's in Florida, Texas, and some other areas that require. So think about that. We're not seeing a lot of delays in some of the FHA, VA, and some other items. Maybe we're looking at some of the deal desk items and some of the valuation of the loan and people who are looking for guidance. It's maybe delaying some of that. So we're seeing some of those functions just a little bit, a little glitchy. As far as the buyer and seller hesitation, uncertainty sometimes promotes that. So sometimes we have people kind of going, well, and they kind of sit on the sideline. I kind of will let you in on a thought that although you may delay your idea, you shouldn't delay getting prepared. So you're better prepared for when you do step in. So we talk about, in fact, next week, I'll talk more about pre-qualification and pre-approval. But it's important to gather your information to understand where you are so you know your playbook, you know the game plan, not being surprised by something. So when we have these shutdowns or various other items, things that I also have to watch is any federal employees that go on furlough. We're going to have qualification issues based on being on furlough. Now, most will get generally all of them will get their back monies. But again, knowing the timeline of qualification for that loan is very important. So I'm watching that as well. Right now, I don't have anyone who's on furlough for any of the loans that we have in. So I've got on top of that very quickly. Currently, I don't have any issues going on in the flood arena. And also my USDA loans, I'm actually in good shape there based on timing. So right now, we've been able to prepare as we were hearing and knowing where things were heading. So we did what we had to do to get ready to go. But we're not seeing as much volatility right now in rate swings, which is good. But again, that doesn't mean it's not going to happen. I think perhaps we drift down a little bit as we head into that Fed move, which is great for our clients in the loans that we currently have in. But I want you not to become the person you think you have to perform the surgery. I want to give you the information and then have someone do that for you and with you. I want to be that person to help guide you through the transaction and allow you to sleep better at night and not have that stress to the transaction. There's a lot of external items that occur during a loan. Just like in your business, you do what you do and you do what you do best. I can't pretend to do your job. I may understand it, but it doesn't mean I could perform it. That's what I want to do for you. I want to be that person that's allowing you to get through that transaction the best way possible with the best information. But once you're in the property, I also want to make sure you effectively handle your finances in the best way possible. And it's not pushing them off to the left or the right or off your desk altogether. It's actually tackling these items, but doing it in an efficient manner, using your time wisely and not living in it every single day. We talk about the Money Max program here. I want to have you go and register for a Tuesday night webinar, 1 hour. You can email me directly, interest@aheadformoney.com. interest@aheadformoney.com. When you send that email, I'll get that. I'm going to send you back access. You don't have to be on camera. You don't have to speak. 1 hour, great information. I will also send you some links to watch to get more background to the opportunity and understand how it may help you. If you find that it's potentially helpful before or after Tuesday, we can set a time independently, you and I on camera, nationwide. We can do this and we can find out your why and understand where you are in your timeline. We can look to put together a program with all your ins and all your outs, come up and free up and find your discretionary and get your payoff date. Most cases, it's as little as 1/3 or 1/2 the time without changing your lifestyle, or maybe in some cases, we've seen 5 to 7 years debt-free. It's a math problem. And a lot of us just don't like math. I do. I put it in the middle of my desk. I love math. But I was looking at doing this myself. Just like maybe you're thinking I got this down. I got my Excel spreadsheet. I can do this. I got my envelopes. I'm good. I know what I'm doing. I get my bills. I know when I pay them. And I round up and I do this. But you're throwing darts. You are making progress, but you're not making the progress that you should be making. And I want to show you how you can put it in overdrive. I was taking my debt from 26.4 years down to 12.3 years debt-free. I thought that was great. I stumbled into this opportunity a few years ago. It took me down to 7.9 years. Doesn't sound sexy, right? 12.3, 7.9, 4.4 years. It was 6 figures. I'll take 6 figures. I'll take half of that probably. I want to show you what's possible. I want to take your current load of obligation and show you how it can be done differently. I'm not consolidating your debt. I'm not getting you a new refinance. I'm not doing all of that. There are times when we free up capital, monthly money, and that can be done. And it should be done. But a lot of times it's not. The mortgage is not your answer, because when you do a home loan and a mortgage, the amortization starts again, perhaps at 30 years. When you do a 30-year loan, it's heavily weighted at that amortization early based on the higher balance, but also it's tilted. So if you pull out your mortgage statement, what percentage is going towards principal and what percentage is going towards interest? The goal I have is to get you further down that amortization so more money is going towards principal and interest is going away. Because you got the loan doesn't mean you have to pay all the interest for the 30 years. It just means the term was 30 years. But as the balance goes down, there's less interest to pay because you move further down that amortization for paying off the loan in that 30 years. Now, when you have a variable rate loan that changes every year, or you have recasting that could occur on certain loans, then it recasts based on the new balance. But a typical amortization is based off the original balance, and you have a payment schedule. That payment schedule then evaporates and pays it off early. If it pays it off early, you eliminated a lot of early interest. So it sounds complicated, but not too much. But it's more so that you can't necessarily be that perfect financial GPS as you use when you drive your car and you have it on your phone or in your car. And I kind of say this tongue in cheek, but when's the last time you reached in your glove compartment and pulled out a road map? Thomas Guide, MapQuest, I don't know. But a lot of those were never interactive until some of them started to be. But you're not pulling out that map on your dashboard and trying to figure out what to do, let alone trying to figure out how to fold the darn thing back up to stick it in the plastic, put back in the glove compartment. You're going to get perfect information on your journey. And if you make the wrong turn, it says recalculate, and it tells you how to get back on path to get to there as fast as possible. But you think you're smarter. You're going to take a different route, but then you hit a dead end, right? It's like driving down a 2-lane highway 50 miles, and on mile 46, all of a sudden the bridge is out, and you go, holy cow. And you think back, well, that's why everyone was waving to me going the other way. You thought they were friendly. They were trying to tell you the bridge was out, but they couldn't tell you because they were driving the other way. And they were trying to drive as fast as possible because they lost all the time that you're now losing as well. I don't want you losing time when it comes to your finances. I want you to gain time, gain your ability to keep your money, put it in your wallet, and do something more productive with it. Many people have been able to build retirement by eliminating that debt. They've been able to buy more real estate, more doors, create more income as a result. Recently, we just illustrated and showed a family that they were buying 5 properties. 5 properties. They paid them all off in, I believe, 17 years. 5 properties in 17 years. No, it wasn't 5 times 30. No, it was 17 years based on cash flow, rents, vacancy factor, money in. Let's look at that together. Let's find out where you are, whether you're looking to downsize debt, be debt free, or looking to build your current income stream. Let's look at that. Let's find out where you are on your journey and your path. 888-543-3980. Email directly interest at aheadformoney.com. aheadformoney.com. Many people look at different areas and ways that they can do this. Many people look towards an equity line, all their money coming in of that and doing it. That can be done. It can be done utilizing this program as well and guiding you perfectly. I'm a big advocate of using an equity line and simple interest to pay off amortized debt, but it also makes sense how long you've had that first mortgage, because you may have paid a lot of that interest already. So we want to see if the equity line is actually going to help you with that strategy, or it's just going to keep you sideways and give you peace of mind and some security. Because I'm an advocate that an equity line, whether you need it or don't, it's having it just in case. So if you have equity in your property, I'd love to talk to you about whether it's 50,000, 100,000, whatever it is, having a line of credit there where if you don't have a balance, you don't have a payment, but you have it available in case you need it. Those are the things that are important. It's peace of mind, security, and being able to sleep at night. And it's making the decisions when you don't need something is the time you do it, because when you need it, no one wants to give it to you. So give us a call, 888-543-3980. That's 888-543-3980. This week, we were evaluating some of our current clients and what they're doing based on their timing of their purchase and close. Some are refinancing. Some are looking to build ADUs in their yards based upon being able to do so. And they're going to create additional monthly monies and create extra value to their property. Some are doing some conversions from other items, and of course, permits. All this is very, very important. It's evaluating what you have, what you're looking to do, and making sure you're doing it right and not having any second thoughts. Now, a lot of our listeners have prepared early in life. They've gotten things with disability income, eventually long-term care, but they've gotten life insurance. And life insurance is protecting not only you, but it's those you love and care about. But life insurance also now has the ability to become and borrow from your own policy. And people are doing that to pay off their own debt. And then usually you owe interest back to your policy. So there are ways to use life insurance based on qualification and your age and what you can do health-wise. And that's something to discuss. I refer that, I don't write that, but it's something to talk about. But it's usually taking that first step first. Checking and savings, only requirement. We take a look, and then we see about integrating as needed or better for you these other items and what's possible. But the checking and savings, generally a third or half the time without changing your lifestyle. And then certain tweaks and certain items can actually make it even better, depending on what it is, your goals and what you want to do. Recently, I've been looking at this, and that's why we have on today's program in our next segment, Alice Sirotkin. He'll be talking to us a little bit more about life settlement and the life settlement market. Because many seniors have life insurance. They got it because they loved it and cared for an individual, maybe children, making sure the house is being paid off, maybe for the spouse, but maybe for the children, the legacy, and the family. But now their children have their jobs, their families starting, and they're doing well. And you're paying premiums for this life insurance policy. And sometimes it's kind of a trouble item because those expenses are adding up. Some people stop making payments, and all of a sudden their policies poof, and the money that was there is minimal. But Alex is going to share with us some information in our next segment. And I really look forward to it because it's something in a diversion of direction that a lot of people have asked me about, and it's not my expertise. I'm Michael Harris. You're listening to Your Real Estate Life on Fox Sports Ventura, 1590 AM, 97.9 FM. Tune in on YouTube at Your Real Estate Life and call us right now at 888-543-3980. We'll be right back right after this break.
Looking for a place to start? United for Loans is the place for you to start your refinance or purchase process today. Call 888-5433-980.
Yes, it's a little scary right now, but every crisis presents an opportunity. How many times have you looked back and said, why didn't I act? Do not try to navigate lending without a map. Tune in Sunday at 7 a.m. on K-Earth 101 with host and CEO Mike Harris of United Mortgage Corporation of America to discuss your real estate life. What should I do? Buy, refinance, sell, or hold? United Mortgage Corporation of America is open for business and ready to lend. Visit unitedforloans.com or call 888-543-3980.
Lending can be a bit confusing. Numbers can be tossed from one direction to another. How can you make it all stop? United Mortgage Corporation of America, unitedforloans.com can be your guide. Call directly at 888-5433-980 for what you need to know when financing a home of your dreams or commercial property. Call now at 888-5433-980 or visit at unitedforloans.com. That's 888-5433-980.
Welcome back to Your Real Estate Life. It's Your Day in Real Estate Radio. I'm Michael Harris, President and CEO of United Mortgage Corporation of America, MLO 233410, NMLS 3189. Call us right now at 888-543-3980. That's 888-543-3980. Catch our programs and get started at unitedforloans.com. That's FORloans.com. And on YouTube at Your Real Estate Life. Let's jump right into it with our guest today. I'd like to introduce to you Alex Sorokin. He has experience over the years as both an attorney and a businessman. Alex wants to talk to you today about the business of life settlements. That is selling your life insurance policy in the capital market. One should not perform their own surgery. Get the right representation. Alex, we're all ears. What do you have for us today?
Thanks for this opportunity, Michael. When I speak with financial advisors, attorneys, or life insurance agents about what we do, I always say that I have nothing to sell. I can only educate. The same holds true here, Michael, with your listeners. My partner and I work as life settlement brokers. A life settlement is a transaction where someone's life insurance policy is sold into a secondary capital market, that is, to an investment firm, for an amount greater than the cash surrender value in the policy, if any. That's the technical definition, but it's easiest to understand by giving an example. Let's say Joe owns a life insurance policy on his own life in the amount of $500,000. So Joe is both the policy owner and the insured, that is the one on whom the policy is written. If Joe dies, the life insurance company will pay the beneficiaries that Joe named in the policy. Here the beneficiary is Joe's son, who would collect the $500,000 when Joe dies. But Joe hasn't died. Let's say Joe's policy is a permanent policy, as opposed to a term policy, where Joe has used the cash that he once had in the policy to cover the costs of insurance that get deducted every month by the carrier. And now the cash in the policy is about to run out. At the same time, the cost of insurance keeps going up as Joe gets older. Now Joe's in a bit of a pickle. He's dumped a lot of money into the policy, but finds that at these higher costs, he just can't afford it anymore. In any case, he needs his money for more important things. Or even if Joe can afford the policy, he just may not need it anymore as his son is doing fine without Joe's help. So what are Joe's options? His basic options are, one, he could just lapse the policy by not paying the premiums. That's easy, but a loss. He could surrender it for the cash surrender value if anything is left. But I've already told you that he's used up most of the cash. The third possible option is to sell the policy. How much will Joe get for the policy? Each case is different and depends basically on a few things: the amount of the death benefit, Joe's age, his health, and the premiums that the buyer will have to pay after the transaction closes. Joe's health and predicted life expectancy are particularly important to the investment community. For instance, if Joe is only 65 or younger and in excellent health, he probably won't qualify. In our experience, if Joe does qualify, he might get anywhere from approximately 10% up to 70% of the death benefit. On $500,000, we're talking about anywhere roughly from $50,000 to $350,000. Clearly, Joe wants to net out as much as possible. That's where we come in as Joe's life settlement broker. In most states, including California, this industry is regulated by the state insurance department. Life settlement brokers must be licensed by that agency. What is most important is that as a broker, we represent the policy owner and the insured. That is Joe in my example. As Joe's representative, we have a fiduciary responsibility to Joe under the law to do what's best for him, including maximizing the price that an investment firm is willing to pay. We do this by going to multiple buyers and pitting each of them against the others, kind of like selling a home, and we're the listing agent that creates a bidding war. But if you've seen any TV ads about selling your life insurance policy, it was most likely sponsored by a licensed buyer in the industry, not a broker. In our industry, this buyer is called a provider. These providers may have spent millions on huge advertising campaigns to attract people like Joe to speak with them directly, cutting out the middleman, which would be us as broker. The objective of any provider is to pay as little as possible for the policy it wants to buy. Unlike brokers, providers, including the ones on TV, are not fiduciaries to Joe. They will not solicit other providers to bid on the policy, and they will not create a bidding war for the policy. Yes, as brokers, we will be paid a fee, but only upon a successful transaction. And Joe will know how that fee is calculated before we represent him. I dare say that Joe might be leaving money on the table if he's not represented by a reputable life settlement broker, of which there are many. Again, every case is different, but Joe will have no out-of-pocket expenses to find out how the market values his policy. And Joe is not required to agree to any price. Life settlements can work with just about any type of policy, even term policies. There's a ton more to explain, but time is running out. So for further information, please call Your Real Estate Life at 888-543-3980. Thanks, Michael. Back to you.
Thank you so much, Alex. Such great information discussing life settlements. Selling a life policy in the secondary market can be a smart move for some seniors who no longer need or can no longer afford their premiums. Again, it's a strategic play, and knowing your options is important. You have to understand what options you have, whether it's financing or the assets you have attained, to understand how they best can serve you and your family. You know, there's various industry groups and estimates. I mean, again, surrendering your policy could be monetized. Give us a call, 888-543-3980. That's 888-543-3980. And we'll get you out to Alex, and this way you could have that no-cost evaluation. Understand your options when it comes to this direction. We have a large listenership who listens, probably have life insurance policies, kind of wonder, hey, I did this and everything was great, but what is it doing for me now? Do I need? All these things matter. The more complicated in my case, I think, the better, because there's more decisions and more options and more things that are confusing. And I want you not to be confused. And as I talk about the Money Max account, we talk about insurance related items. So many things make up your decisions as you head down the road for your real estate life. And for that reason, you have a home, but there's a refinancing playbook. I mean, we got a rate and term refinance when it's right, and a rate and term refinance for a reason. You know, a lot of times people are trying to save that 0.5% or that 1%, or people tout, hey, when the rates hit here, we'll refinance. It depends on how your first mortgage was done initially. If you paid a lot of points and fees, have you earned that back? If you're refinancing a second time or the first time after a purchase, what costs are involved and how is it being set up? How much benefit are you seeing? On a VA loan, 210 days minimum since the last transaction, minimum 0.5% better, but are you going to pay a lot for that 0.5%? We want to make sure your math makes sense. That's where I'll come in. I'll do the math. I'll carry the one. I'll get everything correct. And we'll come up with a plan together which makes sense, or we'll get a target on what should occur to get there. But right now, if you're looking at 6.5% and you're trying to get to a new 6%, yeah, you're saving. But again, we want to look at past costs, current costs, break-even points, and then look at the monthly savings and what it's really doing for you. We also have to look at the variable. depending on when you did it, how far is it pushing it off distance wise, where maybe you had 27 years remaining and now all of a sudden it's 30 years ago. So we want to look at that interest footprint. If we're lowering your payment by 6.5 to 6, as I just gave that example, one of the best things you can do is pay what you pay now to reduce your footprint faster. But again, you're guessing. You're throwing a dart. You're hoping for the best answer, for the best result. I like to be perfect. And that's why I want you to join me on Tuesday evening. Information, just information. Email me at interest@aheadformoney.com. Interest@aheadformoney.com. I want you to join me at 6 p.m. webinar on Tuesday evening. I'll get you out that information. I'm Mike Harris. We'll have a lot more when we come back right after this break.
Get pre-approved for your home purchase. Your landlord loves you. You're making their mortgage payment. Own for less than you pay for rent. Call 888-5433-980.
What if I told you everything you understood to be true about money is not? If there was a program to eliminate most of your interest in your life and pay off all your debts, personal or business, even mortgages, in as little as 1/3 to 1/2 the normal time without refinancing and without changing your lifestyle, would you want to learn more? Call 888-543-3980 and request your information today, or email at interest@aheadformoney.com. That's interest@aheadformoney.com.
Money, 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 must be funny in a rich man's world.
Welcome back to Your Real Estate Life. It's your day in real estate radio. Thank you to our audience on Fox Sports 1590 AM out here, KBTA in the studio, and also our audience on Sunday mornings at K-Earth 101. Those of you watching on YouTube at Your Real Estate Life, and those of you listening audio by going to our website at yourrealestatelife.com or unitedforloans.com. We also have our streaming audience at kbta.com and also on kearth101.com on Sunday mornings. So we got lots of ways to watch, view, and gain the information. But I ask you, let's have your very own program. Pick up the phone, give us a call when we're off the air shortly. But 888-543-3980, I want to talk to you. I'm never too busy to work or speak with you, whether you're in state, out of state, wherever you are in the United States. I want to talk to you about the Money Max program. And if you're looking at lending, I can refer you to an expert in your local market if we're not approved to lend. So I can give that information, advice, and give you that view that maybe you don't quite have. Just recently, we referred a transaction out to Florida. It's getting done great. One of my associate individuals that I've met through other professional experiences, I don't gain anything from it. We refer business as needed based on our states of approval. And I know she does good work. Okay, so I want to make sure we eliminate that. Oh, I think so. I want to make sure we know so. So I'm closing DSCR loans out of state. We'll do those, which are debt service coverage ratio loans, but primarily on purchase and refinances and reverse mortgages, 1 to 4 units. I'm approved in California, Colorado, Montana, Texas, and the state of Washington. Other states, again, investment property, I can close in 46 of them. We want to help you and guide you in the right way when it comes to professionals and other services, as we've had on the program today. We want to make sure you have the right information so you can make that decision. Recently, we closed on a transaction in Colorado where we helped someone through a divorce scenario, paying off the spouse and allowing them to move forward and assume their first mortgage from the ex. So we handle complicated, we'll handle simple. We don't shy away. We want simple, but nonetheless, we're never too busy to work or speak with you. I want to hear from you today. 888-543-3980. Let me know what kind of interest are you paying, and really where is your footprint? When we look at your mortgage statement and we find that your percentage that you're paying of interest is quite high, would it be better if it was lower? And maybe even doing that without refinancing. Maybe you're saying I got a 3%, 4% rate and there's nothing I can do. There is. Let me show you without needing to refinance. 888-543-3980. That's 888-543-3980. Now, some people, a cash out loan does make sense, depending on their credit cards, 20, 30% credit cards, and looking at the payment plan and how they are. Sometimes it's better to stretch if the numbers work out right to allow discretionary to free up to pay down principal or interest avoidance faster. So that can be done. It's part of a math equation that I'd help you to solve. It's kind of stretching it over 30 to free up the monthly discretionary to actually eliminate it faster. So it's kind of like pulling back on the rubber band. And then when you let go, it kind of flings forward and kind of goes real far. Where did it go? You know, you really pulled back hard and now you're trying to find the darn thing, right? So we want to make sure we try to do that with your finances by eliminating that interest and getting rid of principal much faster. So sometimes it's backwards to go forwards, but understanding that backwards move. And that's where a perfect GPS comes into play. I want you to do this with your finances. You've done it with your driving. You guys have fun trying to beat the car and get there faster. You try to do that all the time. I want you to do that with your finances. Now, I talked about the benefits of a home equity line of credit, simple interest. I mean, putting that behind any first mortgage, I say do it. Getting you pre-approved for that, we can handle that directly. Very small equity lines to larger ones. Right now, we're working on one that's $350,000 for an equity line. But it makes sense based on what they're doing, the home improvements and various items they're doing, and then increasing the value. I'm actually looking to utilize that equity line as kind of a 12-month item, because the value of the property is going to go up considerably, which will lower the combined loan to value. By doing so, it's a way to get then the rate lower because we have more equity after the improvements. So it is a two-step process. And under this case, we're going to eliminate fees on the front side, so we're not trying to recoup them on the back side. So it is a math problem. It really, truly is. So, as I talk about the Money Max account, I talk about the interest in saving, and I can get granular with it and get as complicated as we want to be. But when we're looking at interest rate and interest volume, I talked about it in the amortization. But if you had a $400,000 loan at 6.5%, 30 years, monthly payment, 25, 28 range, you're going to pay back about $511,878 just in interest. So not the 400, you paid that back in principal, but you're going to pay another $511,000 plus in interest. Sounds like a lot. Big tip. Big tip. So you really want to watch this. The $511,878, you paid over 100%. The 400 plus the additional, $111,878, total $511. I mean, that's crazy. Crazy money. Now, if that rate was 6%, $23.98 payment, you're still paying an extra, $62,000 range? So the rate matters, but it's still too big of a tip. That $49,000 difference for 0.5%, sure. But until you get down to 5.2%, you're not even at 100%. You're paying back double. We need to eliminate that math. Let's do the math for you. Let's see what we can do. Now, under the Money Max account, I'm just looking for positive cash flow, ins and outs, monthly. If you got an extra dollar every month that's left over, I've seen tremendous results. $100, $500, $1,000, whatever the case may be. We want to make sure we budget correctly, make sure you have enough in your checking and savings to allow you to sleep at night. We don't want to bust those down to zero every month. No, we're not spending money or savings you have now. I want to run the math for you. Your privacy and security is there. Your names, your account numbers, nothing is there for anyone to see if someone got access. All personal to you. No one's touching your money. No one's transferring your money. No one's doing that for you. It's giving you perfect information and advice to allow you to succeed. Nobody is touching your money. Nobody is seeing your private affairs. It's a sophisticated accounting tool that people go, oh, and there's no one attached to it. unless you start nicknaming all your accounts by your name and start throwing things in, that's your prerogative. But as a certified field trainer, I'm going to help you and guide you. You could be as specific as you want. You could be general, household items, or you can name water, power, gas, electric, phone. You can name them all out, more like a check register of sorts. And you have this agenda and item, or you have a collective that goes down as the month goes. It depends on how thorough you want to be. Now, our realistic outcomes of what we've seen with our clients, as I mentioned before, as little as 1/3 or 1/2 the time. I told you my 23.4 was going down to 7.9. Not bad. As I said, personally, I can do a lot of these things as I understand these principles and I'm in this space. I was personally taking down to 12.3. Also not bad, but that was me doing it. Me being smart, but not smart enough. I want you even smarter. Let's do it. 888-543-3980. That's 888-543-3980. The first step, giving us a call. Maybe getting on my calendar to allow an appointment that we can talk a little bit. If you like, you can actually go to our webinar on Tuesday at 6 p.m. Kind of get some information, kind of be in the dark a little bit, and kind of find out some stuff without getting involved. And take 1 hour, 6 p.m., and watch that. Let me know what you think. Send me an email today, interest@aheadformoney.com. When you send that email, I'm going to send you out an invite. When I send you the invite, I'm also going to send you a few links to watch to get more familiar. Now, that 6 p.m. is Pacific time. If you're listening to us in Mountain, Central, or Eastern, make the adjustment. If you're not available on Tuesday night, that's okay as well. I can do a one-on-one presentation with you. I'm never too busy to work or speak with you. Let's get your calendar and let's figure this out. But if you send me the email, I'll send you my calendar link as well with a few links to watch, and we can get started. Do it quietly on your own time. And then we'll turn around and make it happen before year end. Let's not make this a New Year's resolution. Let's make it an end of the year item that we're doing. So next year could be your best year. And we want that then to translate into decisions that you want to make, not ones that are being made for you. I'll include a budget worksheet. Allows you, I don't want that back. It allows you just to organize the monthly, the quarterly, the semi-annual, the annual items, and put those items together. My goal, personally, I spend my money very carefully and I want value, and that's what I want for you. And, a lot of times people say, no, I'm good. But are you? I want to make sure you're the best you can be. And money and money management may not be your thing. You don't have to be to get this done right. We've been able to make a difference in consumers, and professionals are consumers too. We've seen a lot of professionals go, oh my God, and all of a sudden their finances become better and they're giving advice. But also those people who give advice, the CPAs, the bookkeepers, the insurance, the financial planners, the realtors, other mortgage loan professionals, divorce professionals. These individuals have influence and help and serve their clients and clientele, past, present, and future. We've been able to show these professionals how this program, the Money Max, works. They've been able to go back to past clients, current clients, be ready for future clients, and actually come up with another item in their toolbox that actually provides value. Whether it's a realtor, allowing someone to free up their monies sooner so they could buy another door and buy another investment property. Whether it's a lender who's looking to go back, maybe an equity line would work good for that client after they understand the Money Max program and they're able to actually look to have them go get the program. And I could talk to them about how that works. We have other professionals who look to be affiliate, or they become an agent, but it doesn't take over their life or job. And then I'm there also to assist, as I don't do this as my primary. but it's something I've done as a support item and it makes sense. But we have many individuals that are using this to allow their clients to do better. And if you're listening and your professional has not spoken to you about the Money Max program, I want to talk to them, let alone you, because you need to see how this can work. And then you can take it to that professional so they then can go, well, I don't know, I'm not sure. They need to be sure. So I want them to see what the opportunity also is about, because I've seen people just go, oh my gosh, and they have a degree and they're in this line of work and they're still trying to do it by pulling out the roadmap out of the glove compartment. And things have changed a little bit if you haven't noticed. I'm talking to you today and you're listening, streaming, or you're looking at me on YouTube, and these weren't available when I got started some 19 years ago. Things have changed. I'm still on radio. I guess I'm holding on, right? But I'm doing these other items that the next generation expects. And I expect you to adapt and allow yourself not to do what everyone, I guess, has been, but it's what you could and should be doing. I think about it this way. If you see a line, you see all these people in line, go back to your old days when you were younger and you got in line for concerts or getting into an arena and you're standing in this long line and it's not moving, but you're in line. And maybe I just said we knew what it was for, but maybe you see this line, you get in and you think you're in the right line, you hit the person in front of you. What are we in line for? Oh, I don't know. And they keep asking the next guy, I don't know. I think it's the right line. I want you to know your path. I don't want you guessing. I talked about that 50-mile highway, 2-lane highway. I don't want you on mile 46 to realize you got a problem with the bridge out. And you got to go back the other way and you lost all this time, valuable time, your time, or money. Let's do it right. Let's do it right the first time. 888-543-3980. That's 888-543-3980. I want to talk to you about your real estate life. I want to help you with your first purchase, your move up, your move down. Maybe you're moving out. I got it. But let's talk about it. Let's get the right plan. And everywhere in between, let's keep your money on your side of the ledger. Let's make smart plans and let's do it right. Now, we had some questions that were coming in about the Money Max. Does it replace refinancing? No, they can work together. There's payment timing, refinancing, changing loan terms. All those strategies, we will look at those. Now, we had some questions about the government shutdown as well that came in. It is affecting USDA loans, flood insurance, some deal desk items when we're talking about complicated files, maybe with FHA. Some items may be slower with the IRS, but they're still happening. These things are being on items I'm monitoring and working with my clients, and we're notifying upfront as we walk in. But I appreciate you being here today and listening to us on Your Real Estate Life. It was all about mortgage strategies and changing markets. I'm Michael Harris. If today's show made sense to you and sparked some questions, give us a call at 888-543-3980. Visit us at yourrealestatelife.com or unitedforloans.com. I want to talk to you more about that Money Max program and get you there Tuesday night at 6 p.m. I want to get you there for that 1 hour. Interest at aheadformoney.com, and let's get a calendar appointment. Until next week, I want to help you with your real estate life. And what kind of loan do you have?
I wouldn't have to work hard.
United Mortgage Corporation of America, UnitedForLoans.com will continue to take your calls after the program. Call now to start your home loan process at 888-5433-90.
I love this time of year. You got college football going, you got NFL going, you got baseball playoffs. Hey, big weekend for that, right? Depending on your local market and your local team. But I'm going to have fun. I'm going to watch this. You watch teams come together for a common goal so they can win. I want to do that with you and your finances. Let's be a team. 888-543-3980. That's 888-543-3980. We'll talk again next week.
Alrighty.